This week we're releasing not only, 15, 20 different indicators, experts, robots, and managers inside of our trading community, new classes, as well as a trade copier, and that's just in the first few weeks of the year. Hello everyone, and welcome back to our channel. Obviously, this is the channel where we're showing you that trading is as easy as you make it on yourself, right? Not perfect, not trying to be, that whole concept of 100%, but just to show you that you can be profitable. So before we get started, I've got a couple of trades for you tonight and a couple of announcements. Of course, we are going to review the ones we did, weeks ago now, but I digress. Of course, we've got a couple new ones on the table tonight, and I'm just super excited about 2024 in general. So let's start with the disclaimer. We know the SEC is just on a rampage, A member of the group just talked about what they were doing in terms of Bitcoin today. We already know. Please know, everything inside the community, outside the community, on YouTube, wherever else, you are 100% responsible for your trading accounts, for your investment accounts, and the decisions you make. Whether or not you're hooking to a copier service, whether or not you're taking people's signals or trade ideas in a class, whether or not you have an EA or a bot running, you are 100% responsible for the decisions you make on your money, your demo trading, your education, along your journey. It's up to you. Having said that, it is so easy to beat Wall Street. It is so easy to beat the banks. It is ridiculously easy to get that 10, 20% in a year. The problem is most people get it and give it back 100 times and then spend the year having lost, right? So that's the disclaimer, obviously. Let's go ahead and keep going. Brokers, listen, I don't think the SEC is done. I don't think the federal regulations and all the bodies that be are done with the rampage. So every link, every broker that I use, I do have in my link tree. I will maintain the relationships as long as they'll have me. I've got a couple of regulated and unregulated brokers as well. I'll be adding the regulated ones here shortly. Right now, most of my personal money is still unregulated because, well, it's the leverage. Hello. Obviously, you guys can choose prop firms or whatever else, but you guys know all this stuff. I'm not going to spend a bunch of time, but it does lead me into pip counts. So pips are pips are pips. Every broker is going to vary. With all the variations going on now with the kind of up and down of meta quotes and everything else, the pip counts are going to be a little janky. It's going to be kind of hard to verify, prove, backtest, blah, 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 blah. That's hard. Please try to remember that at the end of the day, your trade size, your whatever, should be percent based off of your account. You need to know the contract size that's relevant to your broker and the pair that you're trading. That is going to vary from broker to broker, currency to so many other things. Please take it upon yourself to learn that. Know that for the most part right now, I'm using AFX as the standard in terms of pip counts, just so you guys know. And then, of course, you guys can verify or check the contract size difference between the broker you're using and AFX if you really want to back test that and kind of see where that's sitting. Let's go take a look at where we sit for last year. Please forgive the janky view for a second. So at the end of 2024, I did not work much. We were traveling. We were in Europe a little bit, took most of the holidays off, had some family stuff going on, and now we're 2 weeks into the year. So as you guys can see, it's been about a month. But that was our first losing week. But again, the purpose of this is not to show you perfection. It's to show you profitability, that you don't have to be perfection. You don't have to have that. The whole point of these YouTubes is just to pick a couple of trades using the exact same strategy that I use in the morning, just on a different time frame, giving predefined, pre-spelled out management, right? So there's no speculation of, well, she did this and I didn't know, or he said, she said, blah, blah, blah. No, it's all predefined. So you already know this upfront ahead of time. There's no possible kind of variation in this. How you manage at the end of the day is going to be up to you. A lot of these trades are amazing. Sometimes they're not. We took 2 losses and we'll go take a look at those here in a second. But this is where we ended. We ended up with 2 big, pretty decent losses. That Euro odd really kicked our butt. And actually, I made a second mistake. That's a longer story. But I made a second mistake last week on it with too tight of a stop loss. So I missed a pretty good portion of a move. But needless to say, the trade idea was great. It was just a bit early. So the wins and losses all come down in the wash. That's it. Let's talk real quick about how to manage some of the trades that we're going to go over on tonight's Tuesday night video. This 4-hour public experiment video that I'm going to be doing about every 2 weeks, right? You can expect to see these live on YouTube every 2 weeks. My only ask of you is to set up a demo account. Obviously, you can use the link tree and pick a broker, but set up a paper trading account and try to follow along doing these exact things. And tell me in a couple of months, wait a minute, were these profitable? Could they be profitable? Had you managed slightly different, could have been more profitable? Had you scaled or trailed a little bit different, could you have gotten more? If you re-entered, could you have gotten more? If you didn't choke the stop loss, could you have gotten more? Or hey, what are the things you could do better and or worse how do these perform for you in 3 months? The whole purpose of this experiment is just to show people that trading isn't hard. It's the over trading, it's the over management, it's the mismanagement, it's the jumping from one strategy to one group to one bot to one this. People are all over the place. They end up losing their accounts, losing their capital, right? 99% of people are undercapitalized or underskilled, and the vast majority fall somewhere in between those two. And every company out there, every prop firm out there is capitalizing on that. They're capitalizing and profiting from the fact that you don't have enough capital. All these companies are profiting on the fact that you don't have enough skill. And everyone is profiting from you not having enough of those two things, right? So my goal here on this 4-hour public experiment is just to show you that you can do this with small amounts of capital. You can do this with your own capital, right? I actually want to do this little mathematical equation for you to show you what you could do even using like a small business loan or a credit card. You can beat the interest rate and still be profitable at the end of the year. It's crazy to see what's possible with the math. But anyway, let's get to this. Remember, every trade that I look at on here is using my golden strategy, right? It's the one I've used the longest. It's the one I've profited with the most. It's the one that pays my bills from day to day for the most part. It's my baby, right? You can scalp with it. You can make it multi-timeframe. You can do about 100 different things. I would be lying if I said it's the only strategy that works, because it's totally not. I think most strategies have the potential to work if and when you actually manage your trades right? If and when you stop over trading. But needless to say, it is my favorite strategy, obviously. Let's go ahead and go down. So first and foremost, I generally put my stop loss at structure, right? People see structure differently, so that's subjective. If that's subjective to you, then consider using fractals, right? You can use 1 to 3 fractals back. I typically like to add an ATR cushion. I don't like my stop losses tight. I don't feel like it serves me a purpose. If my accuracy is, 80s, 90%, why am I going to choke my stop loss and make my accuracy 60%, right? Why am I going to do that? That's at the end of the batch of trades, it's not more profitable. So yes, that's how I manage mine. In terms of protection, scaling, trailing, locking, lots of options there. But let's say you take the trade and you're in profit, demo trading or not, what are you going to do, right? Some of these stop losses are huge. Some of these trades have weeks and weeks worth of rooms that you can kind of take one entry and then take another entry as it pulls back, take another entry and follow the whole trend up, right? Great way to be. But how are you going to manage those in between? One thing that I suggest considering is, as you're in profit, when you hit one ATR and or people who are not comfortable with that, I'm saying 25 to 50 pips. I'd really like to say 50, but some of the pairs that's a bit high. So say 25 pips. When you're in profit by about 25 pips on these 4-hour trade ideas, make sure you lock it. That means pulling your stop loss into profit. That's my least favorite protection method, but at least you're not going to blow your account, right? Let's see. You can trail it. That's a little bit better. It means as price keeps going in your direction, you're going to continue to capitalize slightly more until it pulls back enough to knock you out based off of whatever that trail setting is. I personally like to scale out of my trades. I scale out of a pretty hefty portion of that position, and then upon pullback, I'll take a re-entry if it's going in the same direction that I'm looking for it to go, right? That means one of these trade ideas, I end up getting a whole bunch for it. And then I'm losing one, I lose once, right? That's it. So that's not a bad way to be. Those are the management settings that I am using. Let's scroll all the way down here. Let's look at all this messy stuff here. It took us about 16 weeks. These calls are about 20 minutes. Well, it takes me longer to record them because, speaking and all that other stuff is just exhausting, right? But 16 weeks, it took about 4.8 hours. So let's round that up to 5 hours. In 5 hours, we've got over 16,000 pips. We know that it has a lot to do with like this big US MEX here, which we know has got a lot of different, we have 2 of those, a couple of indices. That's the only reason why that's so high. Figure if this was mostly currencies, you're probably closer to, 1,600, which is still not a bad way to be. That's just pip count. Let's look at overall accuracy. We ended up with about an 88% accuracy. At the end of lots of batches of trades, I end up somewhere in that low 90s, high 80s. And I kind of have been hovering there. Once you kind of get into the swing of things, I hover there pretty consistently. I would love to keep it above 95, but even when I get it there, I don't keep it there for too long because just real life, right? News, human error, technical error, whatever else happens, and just whatever. So 88% accuracy is not bad. Remember, you can technically be profitable with a very, very low accuracy based off of your management. It goes back to that. But either way, 88%. On average, how many pips we have won versus lost is about a 4-to-1. Now, I know, again, that's subjective because pip counts don't necessarily equal risk. So let's talk about risk. Actual stop loss versus actual take profit, so where we actually closed out of that trade, is averaging at a 2.86 right now. And that, remember, we really only started that about halfway through. That's week, I don't know, what is that? 10, 9, 8. So 10, 9, right? Week 9 is when we really started that. But that will kind of, again, fluctuate. Either way, we're averaging better than a 2 to 1. Okay, and that's not bad. And that's with the single entry. That's not with the multiple entries you can get when some of these are really big runners and they go for quite a while. Not all of them do, obviously. So let's take a look. Average win size in terms of pips, average win loss in terms of pips. Accuracy, we already went over that. Wins and losses, we already know that. The value of this is huge. I mean, I know it doesn't seem that fancy or seem like that much, but man, if you guys could tape this on your bathroom mirror and just for a second, take all the known weaknesses and all the known strengths and figure out how to capitalize on this, you would be part of that 1%. You would be part of the people who are becoming successful in the things that other people are failing. You would be part of the people who succeed, period, across the board. You'd be profitable. These pips, okay, if you're taking, I guess let me start here. You've got a $500 balance, pretty small, especially for indices. If you're only risking 1% at this whole basket, that means in a couple of weeks, you've already made that $1,100, right? Not bad. That's what your account balance would be. If you've got a $10,000 account and you're only risking 1%, based off of these numbers, you've made about what, $12,000? Okay? $12,000 in 4 hours is definitely not bad. Not bad at all. And that's with a small risk. Very, very small. As your comfort and confidence and skill set increases, you can do 2 or 3%. To give you an idea, in a measly 53 trades, you've already hit 6 figures at 3%. Not bad. Even with the $5,000 starting balance, you've already hit $50,000. In 5 hours of chart time, 16 weeks, you're clearing more than a lot of doctors do after their malpractice insurance. That's the point of what we're doing. I know it's not all super, super fancy, and it's not, what people try to make trading seem. It is work, it is a skill set, but that is definitely not a bad way to be if you're willing to learn this skill set. So overall, remember the smallest lot size. Again, this is subjective from broker to broker. You're looking at about 10 cents a pip, which means that's worth, about $1,600. Okay, most of us aren't trading that. Most of us, that we're not trading that anywhere near that. A lot of these, again, are indices. Figure $1 pips, that's $16,000. Granted, you have to have the capital to be able to afford those trades at that price. Standard lot size is $10 a pip. Standard meaning, the most common. That means it's worth $166,000. Again, your account needs to be large enough and leveraged enough to be able to manage this kind of a lot size. But that's what this was worth in 16 weeks, is $166,000. Not bad at all. And I hope that rings in your ears. I hope that tonight as you go to bed, you hear my voice going $166,000. Man, even if I fail at that by 50%, that means I made $83,000. $83,000 in 16 weeks. $83,000, and that's doing 50% as well. Listen, I don't know how much easier I can make it, but let's go ahead. I do want to show this before I go to the actual charts because, well, I'm kind of in love with it. Bear with me. We already know. We talked about the pip count of how many trades that was. We said 53 trades, right? That means not this whole sheet. It means to about here. Okay? So we can cancel out some of those, but I'm going to keep them on here just for the purpose for right now. Figure you're starting. This is a Monte Carlo stimulator. What I'm trying to show people with these 4-hour trades is that trading is easy. It's not about the perfect strategy. It's not about the perfect pair. It's not about the perfect time of day. I really feel like all that stuff is very thrown around and people get lost. Well, I only trade this way because so-and-so said the market only moves at this time. Well, you go to any chart you want and tell me that the market isn't moving at all times. Now, sometimes, obviously, it has more volume and moving bigger and faster because of news and what have you, but the market is moving 24 hours a day, 5 days a week. You have all of those hours, right? You don't have to follow this concept that people are teaching. Trading is easy, and this is what this can look like. You've got a $1,000 starting balance. You're risking 2.5%. We already said that these calls, which are live, available to you, free, and on YouTube, 88% accuracy. Fine. That's rounded down, by the way. We're rounding, we said, 2.8 is our average risk to reward, and as an actual risk to reward. So again, we're rounding down on that as well. Figure $1,000 starting balance. That's at $19,000 that you've made in a very small amount of time. Actually, this is a couple more trades more accurately. more accurately. But watch, because the wins and losses fall in random places, I'm going to go ahead and do my fancy little thing that I do. I'm literally just hitting the function key to make it kind of randomly choose where the wins and losses fall. Because remember, sometimes they're all going to fall on the top end, sometimes they're going to fall at the bottom end. You're going to have these nice little runs. But at the end of the day, that's still not a bad way to be. That's only 2.5% risk, by the way. So, had to show that because that's what I'm hoping people do. We are the first video of the year, and my ask to you is, of course, please like, comment, subscribe, share it to your friend, and do all the stuff that makes YouTube super happy. That's going to help me make more videos like this and help me help you. But more importantly than even that, my ask for you is this. As I make this content, and I'm actually kind of excited to make it today. It's been a while since I was this excited to make a video. But I'm praying that I get the feedback on this. I'm praying that I'm praying. My ask to you today, and for everybody watching, and hopefully the team will make a couple shorts out of this part, is I'd like you to follow these 4-hour public swing trade experiment. Follow them along with me, the good, the bad, and the ugly. We might hit an amazing, 3 months. We might hit an amazingly bad 3 months. I can't control that, right? I'll do the best I can to pick the best ones, but we're being human, right? My ask is very simple. I'd like you to consider taking these trades, placing them in a demo, having predefined management styles, and I don't care. I'm giving you a suggested style. Please do something along those lines, but definitely predefined, meaning you don't get to change it on a whim because you kind of feel like some chat said or yo-yo did. None of that. So predefined management means I will stop losses here. I'm going to take profit here. I'm going to exit, blah, blah, blah. Some kind of predefined situation. And tell me how these trades are doing in 3 months for you. Consistent risk, right? Consistent all that stuff. That is my ask. I would love the feedback from that. So yes, please like, comment, and subscribe. But more importantly, I'd love to see the comments on here that say, hey, I took these trades. Here's how they're working. Hey, this one, well, I made a new level. I took a re-entry, right? This one, I scaled out. I pulled back. I took one more extra entry. I ended up with 3 trades on this one. Or hey, this one pulled all the way down, never came into any profit, and I took a loss. I hate that. Cool. I want to hear about it. I want to hear how these are working for you. So please do consider that. And now, that is a lot of minutes talking, more than usual. Let's go take a look at these trades. Before I do this, these are the ones we're looking at. Those are kind of old, but we're going to keep them up again. NZD, we actually had 2 entries on. Euro odd, and of course USD-CAD. So those are the 3 we're going to go review, and then we've got 2 more for you today. Okay, I really wish I could start the year off with something a little more steamy and better, but I'm going to have to review the good, the bad, and the ugly, right? So remember, which ones did we say we were going to review? These are all highlighted, kind of that magenta color. So we're going to review these 3 trades. None of them were great, and that's the real. Sometimes it happens. December turned out to be a very interesting month in terms of CHF, as the USD pairs all kind of really continued. It actually moved really well for December and the first few weeks of January. But either way, these were not pretty. We were looking for this buy. We caught, I'm going to have to zoom in a little bit. I know it's very hard to see. We caught this first move up. It consolidated for a hot minute. We caught a second move. So this still matches our criteria that says, hey, you need to protect within 25 to 50 pips and or 1 ATR on the 4-hour time frame. The ATR on this pair is about 22, 25-ish pips. As you can see, it's went down in the last few weeks. Cool. So we know that this was protected. Your management should have some kind of protection in style. So this was the only one we got any pips on, unfortunately. We are going to clear the board. We're going to hit 0. Well, not 0, O. Remove all those cool drawlings. And I'm going to keep this kind of zoomed in because it's been so many weeks. We're going to take this off of our watch list. We're done with this pair. Actually, the chef has been so much fun lately. So much fun. Our next review is going to be USD-CAD. I'm going to zoom in. This is USD-CAD 4-hour time frame. We got our little JGS signal, our golden strategy signal. We got it. So we got the consolidation. We had this little impulse. We've retested, filled these order blocks, did it again, made a spring, came back again, made a double bottom. Was really looking for this just short term. We weren't looking for a lot. But either way, we saw pretty tight management. Okay, cool. Liked what I saw overall. Was just looking for that reversal, not even a reversal, but the retracement on this move. Didn't get much of a retracement, not at all. So this was a full-size loser. And that's part of trading. They're never fun to review, but I want to show them because everybody has them and not enough people show them. So that's USD-CAD. It is officially off of our watch list. Last but not least, this one. Same kind of concept. We got our 4-hour trade idea on the golden strategy. Again, following the strategy. You don't have to have it all figured out. And no, it's not going to be 100% perfect. Cool. We broke past the 50. We were making higher highs. We were forming into this nice little upward channel. Was not looking for a forever move. I did want to see us retest some of that liquidity up there. We didn't get it. We're going to get it now. That's okay. So no profit here either. We did come down and hit our full stop loss, hence that big old pip loss we took on this one, mostly because look at the ATR on this one. We've also got a 449 pip ATR. So we're putting that in addition to that stop loss, and that kind of adds some weight there. But we're taking this off of our board, and now we get to start fresh. So being the first 2 weeks of the year, I was expecting a lot less volume than we ended up seeing. We have had beautiful movement for the last 3 weeks. I'm talking beautiful. So yes, just for those of y'all who are looking, this still has more room, and I still love this pair. A lot of people, we call the trade like this in a signals group as well, and it played out really, really well. Management too tight. If you actually managed at structure, you would have been just fine. So that's EURCAD odd. This does not count as one of the ones that we are doing. Let's see. The two we have marked up are USDCHF. First things first, what do we see? The golden strategy, the golden ticket, has a 4-hour trade idea. So this has been consolidating quite a bit. What do I do every time I come here? I do the same exact things just so it's duplicated, not because it's the only way to be or the perfect way to be. I'm trying to do this in a way that is duplicatable for everybody, for somebody who is maybe they're a little older, not as tech friendly, and I get those messages too, saying please just, they're trying to change their situation, right? This is for everybody. That's the purpose of how we're doing what we're doing. We're doing green. We're doing a solid line, okay, for an active entry. So as soon as I'm done with this class, I'm going to place my entries. I actually have a couple of other entries on this as well, full disclaimer. But this is where I'm looking. So the candle prior to the candle that we're on, I'm buying right here. Okay, my price point will be a little bit different than yours, I'm sure. Not by a lot. That's a big, thick, ugly green line. What is this? What is this ugly green line? We're going to make it blue for projection. Okay. And I'm looking for price to come up at least into this range. So we've got our nice little springs. Please note, I would not choke this management, not only with session crossovers and different brokers, but Chef has had some pretty big gaps at session crossover. Chef has had some pretty big pullbacks, some nice springs. I would definitely consider management way down here. Now, if your account can't afford that, I get it. But the only difference between having your stop loss here and here is the lot size you're using. 2% is 2% regardless of where you put your stop loss. The difference is going to be in the lot size, and the difference is going to fall into your risk and reward. Because the farther away that stop loss is, you have to get more of a move to get a bigger risk to reward, right? Not looking for the end of the world. I am at least looking into this range. Beyond that, I'm actually looking for quite a bit more. But figure coming up into here, I'd like to see how we react at this level. I'd like to see what happens as we come and retest this low as well as this level here. If we get the breakthrough and the retest, I'm going to be buying it back up. If we fail, I don't mind selling it back and down into here a little bit, getting some of these sell pips, and then of course I'll see if we're ready for another buy up. So that's how I'm going to personally be managing this. But yes, looking for a buy on USDCHF 4-hour time frame. Wrong time frame. Let's try that again. Here we are, 4-hour golden strategy. Ta-da! Let's see how it plays out. Right? That's one. Number two is really, really simple, and that's just EURCAD. Here we go. Please, for the love of God, notice the amount of consolidation we have, right? Trading into this. Well, here, let's start with this. From the high and from the low, okay, we're slightly below the 50% mark of that, this consolidation box, if we're looking at the extremes of it. Slightly below 50%. If all we're getting is just trading back into this box and we're not even getting the breakout, you still have approximately 130-ish pips, down to about 50-ish pips, 40-ish pips. Not bad. ATR on this one is 34 pips, meaning you should be protected within about 25 to 34 pips, right? Pretty simple. Let's zoom in. Let's get our vertical line on the candle prior to the candle that we're on, not the one that we're on. Let's try here. We're going the exact, literally the ask price. I'm going to get a little bit of a later entry. That's solidified. I'm going to zoom out. We're buying here to give you an idea. So remember, even if all we're getting is the smaller portion of this move, we're not getting a bigger break beyond that high. Let's look at what this risk to reward would be. I'm going to use my nice little cool tool. You can obviously use a single fractal. Bring this into here. You have a risk to reward of about, I think it's a little less than 3. There you go. 2.94. And that's using a pretty tight stop loss. Now, granted, if we're looking for price to come up and retest this level, okay, now you get that 5.2. And of course, if you're using the major point of structure, sorry, I'm making a mess. One more. It's funny because every time I want this to move, it doesn't move. And when I don't want it to move, it moves. So we've got up to about a 5.77 all the way down to a 3-to-1 risk to reward ratio. That's not bad. You can give this plenty of room and still get a 3-to-1 risk to reward ratio. That's not a bad way to be at all. So yes, easy trade for me. There's a couple others that are setting up real nice, but since I'm already carrying so many, I don't want to go overkill. A lot of the JPY pairs look really, really good. I like JPY for the sell. We've already moved this 30 some odd pips here. We moved another 40 some odd pips here. I really want to see us break below these levels and retest before I really continue that. So those are the 2 trades ideas I have for this evening. Little longer class than normal, but if you have any questions, comments, or anything along those lines, feel welcome to put them in the chat. The admin team has been super, super good at getting back to everybody. Discord now, I probably should have mentioned that earlier, has a public portion of the community. So the 6-figure trading coach community, completely free. If you want to go in there and just be with like-minded people, right? The kind of people you can talk about different ideas with. Obviously, just be a decent human, but it's great to have people in this investing journey that we have, right? That's what we're here for. So happy trading. I am excited for the things to come. I'll see you again in 2 weeks. Take care and God bless.